Technology stocks lead U.S. markets lower in early trading. New York, AP, stocks fell in early trading Monday on Wall Street as trade tensions flared with China's diplomatic retaliation for U.S. support of protesters in Hong Kong. Technology stocks were the biggest drag on the market. Many of the companies in that sector rely on China for sales and supply chains and can become very volatile with new developments in trade negotiations. Adobe fell 2.4% and Microsoft fell 1%. Communications stocks were also falling. Netflix shed 1.5% and Twitter fell 1.3%. Banks were among the few winners as falling bond prices pushed bond yields higher. The yield on the 10-year Treasury rose to 1.85% from 1.77% on Friday. Banks rely on higher bond yields to charge more lucrative interest on loans. Bank of America rose 1.1%. Energy companies held up the best as oil prices jumped 1.7%. ConocoPhillips rose 1.4% and Halliburton gained 2.1%. Steelmakers rose after President Donald Trump said the U.S. would impose tariffs on steel and aluminum imports from Argentina and Brazil. Keeping score, the S&P 500 index fell 0.6% as of 10:05 a.m. Eastern Time. The Dow Jones Industrial Average fell 137 points, or 0.5%, to 28,001. The Nasdaq fell 1.1%. The Russell 2000 index of smaller company stocks fell 0.7%. Trade tensions, negotiations to end the long-standing trade war between the U.S. and China could face a tougher path in December following a flare-up over Hong Kong. China said Monday it will suspend U.S. military ship and aircraft visits to the semi-autonomous territory and sanction several American pro-democracy groups in retaliation for the signing into law of legislation supporting anti-government protests. President Trump has expressed concern that the legislation could affect negotiations. Wall Street is hoping that the nations can make progress toward at least stalling new tariffs scheduled for December 15 on $160 billion worth of Chinese products, including smartphones and laptops. Economic Watch: Wall Street faces a busy week of reports that could provide a clearer picture of the economy's health. U.S. manufacturing shrank more than expected in November, according to figures released by the Institute for Supply Management on Monday. Manufacturing has been a weak spot in the broader economy. A separate report on the services sector, which makes up the bulk of the economy, is expected on Wednesday. Investors will get a glimpse into the health of the jobs market on Wednesday when payroll processor ADP releases its survey for November. The Labor Department will release its closely watched employment data on Friday. Solid job growth, along with consumer spending, have been among the key factors pushing economic growth. Overseas, Asian markets moved higher. Chinese manufacturing expanded in November, according to separate reports from Caixin magazine and the Chief. For more on this story, visit the news article link.